Square.
Content, information, and opinions expressed during the related show are those of the show personalities and guest alone, and not those of Vic Canellis Media Group, its parent, affiliates, or stations. VCMG Live is not responsible for any content, information, or opinions expressed. User bears full responsibility for their reliance on such content, information, or opinions.
Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live. 888-994-4995, Studio A.
Hi, and welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week, we talk about something that can help you to save money or make money. And this week, what we're going to be talking about is with one of our great sponsors, Max Fisch, with Nationwide Mortgage. We're going to talk about why are people with great credit going to pay higher interest rates. So welcome, Max.
Hi, Laura. Thank you so much for having me. It's always a pleasure.
It's nice to have you here. So I did say, why are people with better credit going to pay higher interest rates? Is this true?
Sure. So it couldn't be further from the truth, and I think it's indicative, not to go off on a tangent, but I think it's indicative of a bigger problem that we have, that we just kind of like are all like zombies. Like if the media's pushing something out, we all just read the parts of it.
But we did hear this, right?
Sure, but we read the parts of it that we want to hear, and then everybody goes manic, right, about it. It causes like hysteria, right? The reality is that what they did is they just closed the gap simply.
Well, what's the gap?
Well, so
let's break it down like ABCs.
Sure. So before, let's put it this way. Before, if you had a lower credit score, I'll just use round numbers. I'll use 6 and 7%, okay? If you had a lower credit score, let's say you'd be at 7% because you had a lower credit score. And if you had a higher credit score, let's say you'd be at 6%. Okay.
Right, okay.
Now that's a gap of 1%.
Okay.
Now what's happening is the gap is just smaller. So for example, now if you have a lower credit score, you might have a 6.8%.
Okay.
And if you have a higher credit score, you might have a 6.2%.
Okay.
So it's still a better rate if you have higher credit.
Okay.
It's just not as wide of a gap.
Okay.
If that makes sense.
Okay.
So in no world, if you have a higher credit score, do you have a higher interest rate.
Okay.
Having a higher credit score still results in a lower interest rate compared to somebody who has a lower credit score. The only difference is now there's just not as much of a difference.
Okay.
If that makes sense.
No, that makes sense.
Yeah.
So I guess moving forward on how this is going to affect people, I mean, really isn't going to really have any effect. But one of the things that I think a lot of people don't know that are getting ready to buy is that if your credit score happens to be lower and you're the husband, right?
Yeah.
And you're the breadwinner, and we have to use your income, right?
Mm-hmm.
And I'm not trying to be sexist or racist, but if you're the breadwinner and you have the lower credit score, they're going to go off of that lower credit score. There used to be programs that would go off of the higher of the two and still let you use the income. Not sure why they stopped that.
Sure.
I haven't seen that recently.
It's just the most conservative route in the bank size, that they're going to look at it and say, okay, we're just going to be ultra conservative and go with the lowest score on the application. But the good news for those individuals in those types of situations is that now their rate won't be as much different as people with higher credit scores.
Okay.
It's still going to be different.
Okay.
But it's just not going to be as bad. And I think that was the point of the whole idea and the whole program.
Okay.
However,
do you think that this is like discriminatory, like or originally was? Because 20 years ago, people did not focus on credit the way that they do today.
Sure.
It was actually based more, and all the older folks out there, like myself, know how banks used to work. It was based on more of like a relationship.
Mm-hmm.
Now, we're very focused on credit scores. 25 years ago, credit cards were not as widely used as they are today.
Yeah.
I don't believe credit card debt was as great as it is today. I mean, anybody can correct me if I'm wrong, but I truly believe that go back 25 years, did we even really use email addresses? Like we had them, right? Clearly, you know, I did with the Bell South, but AOL, you've got mail, like those are older email addresses, but things are changing in such a drastic way, which actually kind of goes to our previous conversation that we were talking about before we actually went on the radio, which was you were saying that this job is a lot of work.
Yeah.
Sometimes not thought of as appreciative. They feel like we get paid, but there's a lot of extra things that we do in order to make sure that our clients are having the best experience possible.
Yeah.
Down to, for instance, tell us something recently that you've done. Let's talk about something good. You know, we haven't done that in a while. Talking about something good that you've done recently for somebody that you feel like had an extra outcome that like another mortgage person wouldn't have done for somebody.
Yeah, I mean, that's a good point. And I think just to touch on what you brought up is, I think as professionals in this business, it's such an anxious-filled situation for all parties involved. I mean, it's the biggest purchase somebody's going to make in their entire life. And if you are a good realtor or a good loan officer, you kind of take those anxieties from your client, right? That's kind of the point of the whole transaction, is to take that stress and take that anxiety to give them a good transaction, in a good experience. So I think that, you know, to sum it up, to give you an example of something that we did recently, there was a situation where there was an individual that she had to be out of her place in 12 days.
How come so soon?
The landlord kept giving her notices, and she wasn't receiving the notices. I don't know the ins and outs of that situation prior to talking with her, but all I know is she came and said, I got to be out in 12 days. They're kicking me out, right? And she didn't know where she stood. She didn't know, how she could get into a home with the funds that she had. And so those types of situations are awesome for us as professionals, just because there's a little bit of added, it pulls on your heartstrings a little bit, you know, to where when you can help a family with children achieve not only a goal that they've had for a long time in home ownership, but to do it so quickly and unexpectedly when they're in a tight spot. In a tight
So tell
situation.
us how you did that. I'm really curious.
Yeah, so I mean,
I'm
we
excited to hear this.
Yeah, so we got with this family and they came.
So a realtor found them a house in 12 days.
Yeah, so
Well,
they
it had to be less than that because you got to close. Like,
yeah,
right? So 3 days.
Yeah, I'll tell you from start to finish.
Yeah.
So they came into my office and we sat there for about an hour and 45 minutes just game planning. Like, here's your finances. I kind of put like my financial planner and advisor hat on, right? Here's your finances, here's your debt, here's where we can move some things around to make this work. And we were able to get them approved for up to $300,000. It was between $300,000 and $350,000 depending on the specs of the property.
Right, of course. Which,
And-
let me just explain real quick to everybody.
Sure.
That's when we talk about taxes, insurance, what insurance is going to cost. So when people
Correct.
say to me, oh, what is insurance costing? Well, it matters. Do they have impact windows? Do they have a newer roof? Like, all that stuff makes the difference on what your payment's going to be.
Yeah.
And, you know,
Yeah.
kind of
just,
helps.
And just making them feel comfortable. So they had a friend that was a realtor, and I was able to obviously tell them, okay, thank you for all this information. Now let us get to work, because this is what we do for a living. So obviously work together closely with the realtor. They were able to, the next day, go see properties, put an offer in on a property, and it got accepted.
Okay.
And then from that point on, it was a hard 12 days, because after 12 days, they didn't have anywhere to go.
Okay.
Right? And so we had a 12-day closing. So we had to order the appraisal right away. We had to keep them up to date, you know, all parties involved from the beginning to the end, obviously. And we were able to get it done in 12 days. And so you can imagine the emotional shift. In a less than 2-week period, this family went from, I don't know where I'm going to be in 12 days, to now they own a home.
Right.
You know, and
That's awesome.
And just being a part of that. Obviously, I could probably go on in different ways of how obviously we help people in similar positions, in all types of different positions. But this one, you know, was really really rewarding, especially because this family was super thankful, and now moving forward, it appraised for $20,000 more than they went under contract for. They have equity. They're in a good position. It's less than their rent was, their mortgage payment, and and they're in a good financial position moving forward.
And nobody can tell them to move.
No, and now it's theirs. So
what when we come back, I want to talk about, other programs like Hometown Heroes. There's some big changes coming up on that. So when we go to commercial and we come back, so we're going to see our sponsors, Max Fisch with Nationwide Mortgage, and we're going to see Josh with the Title Brothers. So stay tuned. We'll be right back after commercial break. See you soon.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fisch, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fisch is committed to providing his customers with mortgage services that exceed their expectations. Ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fisch today at 954-729-6933 or max.fisch@nwmcorp.net.
At Title Brothers LLC, our mission is to give you the best closing experience anywhere in the country. Founded in 2020 by Adam Lohman and Josh Wiseman, here at Title Brothers, we're your one-stop shop for residential real estate, title insurance, title and escrow services, real estate closing, and due diligence services. While primarily located in South Florida, we also host dozens of closings throughout the state and even electronically as requested. To contact the Title Brothers, call us at 954-995-4988 or visit our website and get a quick quote today.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at thelaurazell.com. And now back to the show.
Hi, and welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. Like I said, we talk about different things every week to try to figure out how we can make you or save you money. So today, we're here with Max Fisch from Nationwide Mortgage, and we are going to talk about Hometown Heroes. This has been around for a few months now, over a year.
Almost a year.
Almost a year that this has been around, but now they're going to open it up to a larger audience.
Sure.
But I'm kind of curious how it works, because I had somebody telling me that they really weren't getting a lot of money from this program. So explain to us how Hometown Heroes works and what originally it was and what it's going to be.
Sure. So originally, Hometown Heroes came out last summer.
Okay.
And the state of Florida pretty much said, here's, and this is just a quick way of explaining it. Here's $100 million pooled together.
Okay.
Okay. There's $100 million that's allocated towards this program. First come, first serve, basically. And
well, originally it wasn't first come. It's based on, you got to tell them originally.
Well, I'm saying first come, first serve in the sense that once the $100 million is out, it's
But but who is it specifically for?
Correct.
Let's talk about who it's for.
Yeah, so when it first came out, the occupations were pretty much for
teachers,
anybody in the medical field,
right.
Teachers, nurses, therapists, police officers, firefighters, people like that. And what it is they give you a 0% interest-free loan. Okay, it's not a grant, which a lot of people think it's a grant.
Okay.
It's a loan, a lien on your property, for the lesser of 5% or $25,000.
Okay, so let's look at that on a $100,000 loan.
Yeah, so on $100,000, you would get the lesser of 5% or $25,000. So 5% would be $5,000 on $100,000.
So you get $2,500.
So you would get $5,000.
I thought you said the lesser.
The lesser of 25% or $25,000. So 25% of $100,000 is, or not 25%, 25 grand.
Okay.
The lesser of 25,000 or 5%.
Okay.
So on 100,000, that would be $5,000.
$5,000. Okay.
And that's where a lot of mix-up happened, just because a lot of people are like, "Hey, why am I not getting 25,000?" Well, it's because 5% is less than 25,000.
Okay.
On whatever loan amount they were getting.
So if you did a $300,000 loan, it'd be $15,000.
It'd be 15,000. It wouldn't be.
So
25.
you could buy $1 million property on this program then.
Well, the next caveat is that there are income limits.
Okay. So where does the income limit
You
start?
can't make more than 150% of the area median income.
Okay.
So for example, in Broward County, that's around 90,000. So you can't make more than 150% of 90,000, which is about 130,000.
Okay.
So
on 130,000 with no debt, what could you afford?
you'd probably be able to qualify for between 600,000 and 700,000.
Okay.
Roughly. And so in that event, you'd be able to use the full 25,000 because 5% would be.
And that
more than-
25,000 is used for a down payment or
it goes towards the pool of down payment and closing costs.
Okay, so partial.
Yeah.
So if your closing costs on that price, which would probably be about that,
Yeah.
right?
Yeah.
But if the lender didn't allow that much in closing costs, then the difference would go towards down payment.
Correct. So the 25,000 can go towards either. Let's say it's 40,000 to close, take 25 off, and then you'd have 15 remaining.
Okay.
Now, to answer your question, the change starting July 1st is, number one, there's no more occupational requirement. You don't have to be a nurse, firefighter, therapist, doctor. Now it's if you work out of a Florida-based company.
Yeah, I heard this is the caveat.
Yes.
Wait, this is the caveat because my daughter works for Home Depot, right? So they're not based out of here, or are they?
Well, there's not super clear guidance on it as of now. Here's my understanding.
Okay.
My understanding is that you have to work at a brick and mortar in Florida. Meaning, if you work at Home Depot, even though their corporate office isn't in Florida, but you work at a Florida location,
Okay.
then that counts. That's my understanding.
Oh, but if you work from home, like selling from
Correct.
home for them.
Correct. And they're not based in Florida, that might be a gray area nuance.
Okay.
There's not a ton of guidance on that as of now, but that's the new occupational requirement, I guess, if you can call it that.
Okay.
Is that has to be Florida based. And the 0% interest-free loan is going up from 25,000 to 35,000.
Okay.
So now it's the lesser of 5% or 35,000.
Say that one more time.
It's the lesser of
5% or 35,000.
or
Okay.
$35,000.
See,
Yeah.
agents, there's so much stuff you guys need to learn in order to understand all these programs and make sure that you're able to, be educated on what's coming up and how that's going to work. So, for instance, like, I'm sure there's a lot of people that have people that are working from home right now, and now you got to find out, are they located out of Denver, Colorado? That's going to make the difference.
Yeah, absolutely. But I've done Hometown Heroes a lot, and it really helps. I mean, they make it a level playing field with interest rates, so all lenders are priced the same.
Oh, that's good. So
Yeah.
you can't say, well, I'm going to the.
Yeah.
So how does that game work, though, where lenders are like beating each other up with can that happen?
With Hometown Heroes specifically, or just in general?
Well, I guess
With
is
Hometown
it
Heroes?
different from one and the other?
Yeah, so Hometown Heroes kind of levels the playing field. You're not allowed to charge lender fees. You're not allowed to charge points. Can't buy down the rate.
But what about the actual rate?
The rate is level. It's the
So
same.
basically, the government is saying that the rate is 3% or 8% or 4%, and so if I went to you and got a quote based on my credit
Should
score,
be the same if you go somewhere
and I go to another lender, it's going to be the same thing.
Should be.
Okay.
And that's just because obviously the program isn't meant for people to be taking advantage of.
All right, guys, so if you're with another lender and you're going to use Hometown Heroes, you need to go see Max so that you can see if what he's saying is true, and if not, shame on you.
Yeah.
Not you, but shame
Yeah,
on whoever,
of course,
right?
Of course. Yeah, the whole program isn't meant to be able to take advantage of people or charge people more, and that's why they put those parameters in place.
So what do you tell the audience out there of what they should do to get the best deal possible?
Yeah, so to get the best deal possible, whether that's with Hometown Heroes or with anything, obviously I encourage people to do their due diligence, right? Check a few different people, just to keep everybody honest, of course. But I think at the end of the day, a best deal isn't just an interest rate.
It is, right, correct.
You want to shop for the best interest rate, but you also want to see who's telling you the truth and being honest with you, and disclosing all the necessary information for you to make an intelligent decision.
So let's go back, though, to several episodes ago. You had mentioned that because interest rates in some people's heart right now feel it's really high,
Sure.
right? You said something about refinancing, doing
Yeah.
it for free. Obviously, you still have to pay, you have to pay your title, your doc stamps, all that fun stuff. But
Yeah.
you were saying that you would do it for free. Is that the same case with this Hometown Heroes when interest rates drop?
Absolutely.
So, it's any loan that you do across the board?
Any loan that I do for returning clients, we have a refinance guarantee, and obviously I put it in writing so people don't have to take my word for it. If they, when they return for a refinance to lower their interest rate, I will do it free of any bank costs, underwriting,
Okay, so
processing.
you'll kind of disclose to them and show them
Correct.
exactly what it is that they do need to pay, so that they don't feel like they've been misled. Because
Of course.
a lot of people don't understand that title is not a lender's charge. It's a charge that has to be there because the government needs to get paid.
Yeah.
Just like if you have to refinance and your association's requiring an estoppel fee to
Sure.
do the refinance, there's things that you just have no control over.
Absolutely. And on the disclosure that I send out for the refinance guarantee, it lists all of them.
Okay.
That will be, your appraisal, your credit report, your processing, underwriting, none of that will be there.
Okay.
Yeah.
So do you right now have any like secrets or any programs right now that
Yeah.
we need to know about?
Yeah, so
I
there's
mean, is
this,
it a secret, or are you going to tell us?
yeah, so there's this new 1% down program where for conventional loans, you just have to qualify for conventional. You have to be a
Okay.
first-time home buyer, and you have to make, depending on the area you live in, but in most places in Broward, you have to make $62,000 or less. So it's for people, in the price ranges of maybe 250 to 300 and below.
Okay.
And they can put 1% down as a first-time home buyer, and the bank covers the additional 2% that you would typically need for your 3% down payment.
And what's the interest rate on something like this right now?
Standard conventional, you're probably in the mid-sixes.
And you still would need your closing costs, right?
Yeah, you'd still need your closing costs, but only 1% for a down payment. So you could look at it as that 2%.
Now,
going
what's the
towards your-
mortgage insurance look on something like that?
No mortgage insurance.
Oh,
That was my
guys,
next one.
that's
Yeah.
pretty big.
That was my next thing. Is there's no MI on those programs.
Okay, so interest rates are pretty much similar to everybody else. 1% down. Okay, this is definitely something to start to like
Push out there. Of
push
course.
out there, right? Because right now,
Yeah.
I think we can get sellers to pay closing costs.
Yeah.
But you have to make more than 62 or less than 62?
Less than 62.
Less than
You
62.
can't make
So
more. It's 80%.
if you have a part-time job and you're making, like on the part-time job, you're making $10,000 a year and you're making 60 at your other job,
Yeah.
you can't like throw the part-time away because it's already shown on your taxes.
No, you can. It's qualifying income. So, like, if you are a part-time realtor and you make less than 62, and that's the income we're going to use, doesn't matter if you make $500,000 elsewhere. It's the qualifying income. We can whatever income we're using to qualify you on.
Okay,
That's what
so
we
you can have
use.
other income and you can exclude income.
As long as it's from a different job. Like, we can't take the same job and be like, hey, we're only going to use a quarter of this income.
Right.
You
So let's say, for instance, like, I'm a realtor. Oh, I am a realtor. So if you need a realtor, you can call me, 954-650-0827. Or if you need my 0% fix your home up, I can help you with that too. But so let's go back. So if I make 62 as a realtor and then I'm doing, or let's say I make 62 as a property manager, right? Because I do
Sure.
property management.
Sure.
But then I make 150 as a realtor.
We're not using that income, so we'll just use the
Use the
property
62,
manager.
and then
Yeah.
but I have to be a first-time home buyer.
Correct.
So that's another catch.
Yeah.
Okay.
You have to be a
Just
first-time
like,
home
and
buyer.
then once you buy that home, now you can go use your DSCR loan, which
Yeah.
is like but you have to come up with like probably
20%.
20%. And if it's a duplex, which, by the way, guys, I have single-family homes that have units in the back, so they're not duplexes. So you can actually buy it as your primary
Oh,
with
that's
like
a
as
good
low
one.
as like 3% down,
3.5%
or
down.
3.5% down FHA. So if you're looking to live in something and use it as an investment as well and make some money on it, I've got that for you.
Yeah.
And it's dependent upon how many units and depending upon the city. So if you need to call us, you can get Max at,
954-729-6933.
or you can get me, and I can give you some of that information too at 954-650-0827. Check out my website at lauracell.com. Again, check me out, lauracell.com. Remember, we're doing 0% financing on fixing up your home so you can get more money, and I can show you proven track record of where I've had people that have gotten at least $60,000 more for $20,000 into it. So they're getting $80 for the 20, so it's really, you're making $60. So, and I'm sure you've got 203K loans for buyers that buy
Absolutely.
the house that isn't fixed up, that got it for a better deal.
Yep.
So we can talk about 203K loans next time,
Maybe next time, that'd be
conventionals
great.
and FHA.
Yeah.
But we want to thank you so much for watching us tonight. And if you're thinking about buying or selling, give us a call, Laura Sanders, Remax Direct, or you can give Max Fisch a call with Nationwide Mortgage. Thanks, and you guys have a great night.
Thank you for tuning in for Making Money with Laura Sanders, a name you can trust. To join the conversation, call us at the studio, 888-994-4995 Studio A, or contact Laura directly at 954-650-0827. Laura Sanders, a name you can trust. We look forward to seeing you next week.
The opinions expressed on the